The Biden administration issued an executive order Wednesday aiming to curb high-tech investment in China. It covers semiconductor, quantum computing, and AI companies. To talk more about this, let's bring in CNBC contributor Michelle Caruso-Cabrera. Michelle, good morning to you.
Good morning, Kelly.
So it sounds like the most affected firms would be American venture capital private equity firms. I mean, how big a part of their investments was this in the first place, or how big an impact do these firms have in China? Is it really going to kind of hold up what they hope to do in high tech, or is it just important that the administration feels like our money is not funding their ambitions?
You bring up a good point, Kelly, when it comes to VCs and private equities. This executive order and the way Treasury has interpreted President Biden's executive order is to be focused on private equity and venture capital firms. But what we've seen is that a lot of them have been pulling out anyways, out of China, because a lot of the activities that the Chinese government themselves have been doing when it comes to passing espionage laws that make it very difficult that if you have a Chinese subsidiary, that subsidiary cannot send information back to the U.S. company that owns it. So slowly but surely, as those things have been happening in China, there's been less investment. I think that's why this executive order is much more narrow than when it was originally conceived 2 years ago. I mean, when people started talking about prohibiting U.S. investment into China 2 years ago, to use a current metaphor, people wanted to go Lina Khan on it. They wanted everything off the table, no investments in stocks and bonds, which are passive investments, et cetera. What's happened over the last 2 years has become much more narrow. Prohibitions solely. It's only prohibited advanced semiconductors and also quantum computing. In fact, it doesn't even prohibit U.S. investment into artificial intelligence. It requires, the way Treasury interprets it right now, that U.S. investments, you get a notification to Treasury if you're going to do a U.S. investment into artificial intelligence or into less advanced semiconductors. That's very different. I mean, we were talking at one point about whether or not biotech was going to be included, pharmaceuticals were going to be included, whether or not companies that involved large amounts of U.S. citizens' data were going to be included. And now it's just prohibitions on two sectors and notifications on a third sector.
That's a great point. And what does that tell us about, if this is more, sound than fury, or I don't know what the right analogy is. I mean, are we going further in terms of trying to curb China's economic and technology ambitions and in terms of decoupling our countries? Or is this just almost a political gesture of some kind?
Look, the idea for this very much came out of the national security establishment, right? And they talk about small garden, high wall. We're going to be very focused on technologies that we know can aid the development of the Chinese military. And we don't want U.S. investments to be able to do that, because if we ever have to go to war with China, we don't want to help them along the way. At the same time, we absolutely know that we have a relationship that in many ways is very connected economically. And so the intention here is to try to keep capital flows moving in areas that are not a threat to the U.S. national security.
Sure. And I always think about kind of the big high-profile consumer names, the Starbucks, the Apples, with a lot of China exposure. CEOs have been going back and forth, maybe just kind of poking around, trying to feel out what's happening in there a little bit. Should we expect retaliation then? I mean, I don't know if the Chinese are going to be persuaded by, well, it could have been worse, or if they're simply going to say, look, the U.S. keeps coming after us.
We've already heard from one of the senior foreign leaders from China that there will be retaliation, but let's see what it is. The one advantage where they have is production capacity when it comes to anything related to climate technology. So that is one area they could retaliate. In theory, they could retaliate against specific American companies. But the risk that China faces in all of this is that they have a very weak economy right now. And how much do they want to do that actually ends up hurting themselves more than it hurts us? Look at the deflation. Deflation in this day and age is an incredible feat to achieve when the rest of the world is battling inflation, right? And yet they have it in China. They have the export data that came out was really devastating. So they face a lot of tough choices if they're going to make those kind of choices.
Absolutely. And even Stephen Roach and others have warned we could also suffer from, everybody kind of agrees if we're both going this route, we're both going to it's going to hurt at growth and it's going to hurt at the margin, but that these are important strategic initiatives, at least for the U.S.
When you look at all of the documentation that was put out by Treasury yesterday, there's a 45-day comment period. And when you read extensively through the questions that they would like to ask, they understand very much that there are trade-offs if we do this. Yes, national security is important, but there will be other costs that go along with that. So let's examine really closely. Like, one of the questions they ask is, okay, should it be all private equity firms? Should it only be private equity firms of a certain size? Should it be investments of a certain size? They're really very specific about the commentary and questions that they're asking to the investment community to come back with them to try to handle those trade-offs that you're talking about.